Did you know that the pet industry is worth hundreds of billions of dollars a year? Yes, you heard right. Beyond the love for our dogs and cats, there is a booming industry that is generating fortunes. In this video, you find out why investing in this sector makes sense, what opportunities exist, and whether it can really pay off in the long run. It might sound crazy at first, but according to reports such as the one by the consultancy firm Mordor Intelligence, the data speaks for itself. By 2025, this market will exceed $248 billion. I will continue to grow at a high rate during the current decade. As always, I'd like to remind you that if you enjoy this content, please subscribe to the channel and share it with someone who you think might find it interesting, especially if they have a pet. Perhaps it's something they haven't considered yet. As Peter Lynch said in his book, One Up on Wall Street, invest in what you know. Beyond products people use every day like Google, Netflix or Temu, whose parent company by the way is PDD Holdings, do you know what else I keep noticing every time I step outside? Pets. In fact, I'm sure that no matter your age, you will come across plenty of people with pets, and possibly even more than one. And of course, where there's a mass market and demand, there's a business opportunity. And with that, an investment opportunity. So today, let's look at the 3 reasons that make this sector very attractive in the long term. Generation Y and pets, a winning combination. Millennials, or otherwise known as Generation Y, are that demographic group born between 1982 and 1995 that is beginning to enter that stage of life when they start to enjoy a greater earning capacity, and curiously, the data shows that this is the population group that has the greatest predilection for owning a pet. For example, in the US, it is already becoming clear that millennials are the segment of the population with the most pets, and Europe is following the same trend. In fact, the number of dogs as pets has not only grown in the last decade, but at an ever-increasing rate, especially in the wake of the pandemic. And all this while fertility is plummeting across the West. Is it because we are having fewer children, so we want more furry ones at home? Be that as it may, this trend doesn't just mean more grooming shops and premium dog food brands. Imagine what will happen in 10 years' time, when that wave of young pets adopted by millennials starts to age and need more expensive veterinary care and long-term treatment. We may even witness a double demographic bomb, the human one with problems of pensions, healthcare, and the canine one. Who knows, maybe even political groups could emerge who, in the heat of the vote, start to promise social security for animals. I wouldn't be surprised. Beyond this video, the next time you take a walk through the streets of your city, stop and take a look. I'm sure that within your own neighbourhood, it will be easy to find a veterinary clinic, a hairdresser for animals, or a food shop, maybe even all 3 at the same time. But this local reality has a global reach. As mentioned, Generation Y are adopting or buying more pets than ever before. However, it's not just a change in habits, but an economic boom. For example, the market for health insurance and medical services for pets in the United States. According to a report by the consulting firm Mordor Intelligence, it estimated that in 2024 it could reach $12.21 billion, and that this figure could reach $14.5 billion in 2029. Which would offer an annual growth rate of 3.51%. It may seem slow, but if we talk about the pet grooming market, things get more interesting. In 2021, it was already worth $7.45 billion, and by 2030 it is projected to double to $14.59 billion, with a CAGR of 6.3%. This is what is already known as the humanization of our pets. A dog is no longer just a loyal companion, but a member of the family, and that translates into premium services such as health insurance and toys and treats of all kinds. All in all, worldwide, the pet sector as a whole could increase its turnover from $248,710 million in 2025 to $369,850 million in 2030, with a CAGR of 8.26%. In the UK, the trend of rising pet ownership mirrors global patterns, with an increasing number of pets being adopted in recent years. According to the Pet Food Manufacturers Association, the UK is one of the leading countries in Europe for pet ownership. Data from the PFMA suggests that there are over 12 million dogs and 13 million cats across the UK, reflecting a significant rise in pet numbers. The growth in pet ownership has been particularly pronounced among younger generations, with Generation Y playing a key role in driving the boom. Many of these pet owners view their animals as part of the family, leading to an increase in spending on pet-related products and services as mentioned before. The pet care sector in the UK is rapidly expanding, with pet-related expenditure rising consistently year on year. This growth has also been influenced by the rise of more personalised pet products and services, as well as increased awareness of animal welfare and the emotional benefits pets provide. According to research, many pet owners are now willing to invest considerable amounts in ensuring their pets lead happy and healthy lives. In addition, the increase in pet ownership is also seen as a response to demographic changes, including smaller family sizes and an aging population, as well as changing attitudes towards pets and family structures. For many, pets have become a primary source of companionship, especially as more people live alone or in smaller households. As always, I just want to mention that I'm not a professional financial advisor. My goal is to share information and analysis based on reliable sources to help you make informed decisions. However, this is only an opinion, and I encourage you to do your own research before investing. Now, let's look at some companies that might be of interest. Zoetis is a company that was born in 2013 as a spin-off from Pfizer, with an exclusive focus on the veterinary sector, ranging from medicines and vaccines to diagnostic tools for both production animals and pets. And of course, it has continued to benefit from the huge increase in pet care spending, especially in developed countries. As for its financial growth, it is not skyrocketing, but it is steady. Its operating profit has been growing at rates of between 5 and 10% over the last 3 years, maintaining an EBIT margin of close to 40%, which is not bad at all. This is translated into steady earnings per share increases, even reaching double-digit growth. In fact, considering that it is a company that requires physical infrastructure, these numbers are quite attractive. And if we talk about dividends, Zoetis has been increasing them for 14 consecutive years, with a current payout of around 35% and a dividend yield of close to 1.2%. That may not seem very high, but if the company maintains its rising earnings, that dividend could go up at a good pace over the next few years. And on the chart, the stock has been moving in a sideways range for just over 2 years. Specifically, it has been stuck in a wide channel between $145 and $190. Therefore, it might make sense to wait for a visit to the lower end of that range, near $145, to enter at a slightly more comfortable valuation. As of today, with a PE close to 30 times, it does not look like a bargain, but it is not out of order either, considering its leading position in a growing niche market. For example, if there were to be a drop in its price due to any one-off news, it could be a good opportunity to buy Zoetis at an interesting price. Tractor Supply. Tractor Supply is the largest rural lifestyle retailer in the United States. Founded in 1938 as a mail-order tractor parts business, it has grown to operate more than 2,400 shops in the US alone. So its main focus is to cater to farmers, ranchers, or rural homeowners, but also to pet enthusiasts. And of course, they sell everything from pet food and supplies to farm animal care products, as well as clothing, tools, and other items for rural use. Financially, the company shows a fairly stable situation, even if it does not stand out with overwhelming figures. Its revenues and operating profits are growing steadily, but usually in single digits. Even in 2024, according to its fiscal year, they were only slightly down on the previous year, which, all things considered, does not seem very worrying either. And, well, the same goes for their earnings per share. They have increased over time, but without big jumps. Where we do see something more interesting is in its dividend policy. The company has increased them steadily and in quite a few years at double-digit rates, which has led to a current payout of 45% and a dividend yield of over 1.6%. Not bad if you like the idea of collecting growing dividends from a consolidated business. As for its share price, after growing by more than 200% in the last 5 years, it seems to have entered a phase of maturity. Currently, its PE ratio is 27 times, which could indicate that it is trading at a reasonable price, but not particularly cheap. For lovers of value investing and the search for a good margin of safety, it might be a good idea to keep an eye on it and see how its next results presentations evolve. That way we can see if it maintains the sustained growth that justifies its valuation. And what about the index-linked alternative that we normally present? On this occasion, we cannot bring you any ETFs, as there are currently no UCITS ETFs focused on the world of pets. However, there is one ETF in the US that does cover this sector, the ProShares Pet Care with ticker PAWZ. But of course, as it does not comply with UCITS protocols, or in other words with European safety and regulatory standards, it is not possible to invest in it, unless you do some trickery with financial options. For example, if you are interested in this niche, you could sell a put option with a strike price close enough to the value of the underlying to increase the probability of being assigned if the price rises, and incorporate the ETF in your portfolio. And if it did not rise, you would simply have earned the premium. In short, we are facing a sector whose demographic growth of animals, both domestic and production, and their increasing quality of life, suggests that animal health and care companies have a very promising future ahead of them, to say the least. We hope you like this other way of looking at the stock market and financial markets. We often tend to focus on the cutting edge of technology and ignore sectors that we live with on a daily basis. As the popular saying goes, sometimes the trees don't let us see the forest. But now it's your turn. What do you think? Do you see growth in this sector? What other pet companies could be interesting? And do you think that having so many pets will impact our demographic future as a society? Leave your thoughts and opinions in the comments below. And that is all for today. I hope that this video has introduced you to a new sector, or at least helped you to look at it with a different perspective. And as always, if you like this video, don't forget to give it a like, subscribe to our channel, and I will see you in the next video.